What if I told you that your financial future could be reshaped, not by some new app, not by a lottery ticket, but by listening to the timeless wisdom of the greatest investors in history? Think about it. Warren Buffett, Ray Dalio, Charlie Munger, and Peter Lynch have collectively turned ordinary sums into fortunes that span generations. Their lessons aren't just for billionaires sitting in skyscrapers. They're for anyone, even someone holding just 1,000 pounds today. The question is simple but powerful. If you had 1,000 pounds right now, how would these masters tell you to use it? Their strategies are not theories in textbooks. They are battle-tested approaches that survive wars, market crashes, bubbles, and human greed. Let's step into their world, hear their voices, and imagine how they would guide us today. Warren Buffett, the power of patience and compounding. Warren Buffett is often celebrated as the Oracle of Omaha, not because he predicts markets, but because he mastered the discipline of patience. Buffett famously said, "The stock market is designed to transfer money from the active to the patient." His empire was built not on flashy trades, but on long-term thinking. If Buffett had 1,000 pounds today, he wouldn't chase trendy stocks. He'd likely point us toward broad, low-cost index funds or companies with what he calls a moat, a durable competitive advantage that protects them from rivals. And then, he'd give us his most radical advice: do nothing. Let compounding work quietly. If you invest 1,000 pounds into a fund that grows at 10% annually, in 40 years it becomes nearly 17,500 pounds. No gambling, no sleepless nights, just patience. Buffett's lesson is that time, not timing, is the most powerful force in finance. Charlie Munger. Wisdom that outlives him. Charlie Munger, Buffett's lifelong partner at Berkshire Hathaway, passed away in 2023, but his wisdom is immortal. Munger taught that money is not just about numbers, it's about how you think. He believed that success in investing and in life comes from building what he called a latticework of mental models. In other words, you pull knowledge from many disciplines, not just finance. One of his most memorable warnings was about envy. He said, "Envy is a really stupid sin because it's the only one you could never possibly have any fun at." Applied to money, this means that chasing investments out of jealousy because others are getting rich leads to disaster. If we entrusted 1,000 pounds to Munger's philosophy, he would first tell us to invest in ourselves. Education, books, skills that compound like money does. The second step would be to stay rational when the world loses its mind. He often said, "A lot of people with high IQs are terrible investors because they've got terrible temperaments." Munger's legacy is a reminder. It's not intelligence alone that creates wealth. It's clarity of thought and discipline. Ray Dalio. Diversification as survival. Ray Dalio, founder of Bridgewater Associates, approaches money like a scientist. He isn't obsessed with predicting the future, he's obsessed with preparing for it. His most famous principle is the power of diversification, what he called the holy grail of investing. Dalio showed mathematically that if you combine uncorrelated investments, you can reduce risk without sacrificing return. For someone with 1,000 pounds, his advice would be clear. Don't put all your eggs in one basket. Spread it across different asset classes: stocks, bonds, commodities, maybe even inflation hedges like gold. That way, no matter what economic weather comes, booms, recessions, or inflation, you have something working in your favor. He often reminds us, he who lives by the crystal ball will eat shattered glass. In other words, you don't need to predict the future, you need to survive it. A small, balanced portfolio today could protect you from the storms tomorrow. Peter Lynch. Investing in what you know. Peter Lynch, the legendary manager of Fidelity's Magellan Fund, turned Wall Street on its head with a deceptively simple principle: invest in what you know. He believed that ordinary people often spot winning companies before professional analysts do. Why? Because they encounter them in everyday life, as customers. If Lynch had 1,000 pounds today, he'd tell you to look around. What products do you use daily? Which brands are growing rapidly in your community? Which services have you recommended to friends without hesitation? Those are often the hidden gems. His other big warning: don't invest in things you can't explain in simple language. If you can't describe why you own a stock in a sentence or two, you probably don't understand it. With £1,000, Lynch's lesson is that your personal perspective, what you actually see and experience, is a unique edge that billion-dollar hedge funds don't have. Blending the lessons. Now imagine these four giants sitting together. How would they combine their philosophies into a roadmap for £1,000 today? It might look like this. 1. Buffett's patience. Put about £400 into a broad, low-cost index fund. Leave it untouched for decades. This is your compounding engine. 2. Munger's self-investment. Dedicate £100 to education, whether that's books, courses, or learning a new skill that increases your earning power. 3. Dalio's diversification. Spread £300 across safer, balanced assets, maybe a mix of bonds, a commodity ETF, or a slice of gold. This is your stability. 4. Lynch's everyday edge. Use £200 to invest in a company you truly understand and believe in. This is your personal bet. It's not just about dividing money, it's about dividing mindsets. Patience, clarity, resilience, and awareness all working together. At the core, what these investors teach us is less about money and more about character. Buffett shows us that patience is wealth's best friend. Munger, even in his absence, reminds us that clear thinking outlasts trends. Dalio urges us to prepare for uncertainty rather than predict it. And Lynch empowers us to trust what we already know. £1,000 today might not seem life-changing, but guided by their wisdom, it becomes more than cash. It becomes a seed. And a seed, if nurtured with discipline, grows into something far beyond its humble start. So here's the real challenge. If £1,000 landed in your account right now, how would you use it? Would it slip away on short-term pleasures? Or would you treat it as your first step toward financial independence? The world's richest investors don't just hand us rules, they hand us philosophies. They teach us that money is not about luck or secrets, but about patience, discipline, preparation, and perspective. The next Warren Buffett, the next Peter Lynch, the next disciplined investor, it could be you. But it starts not with millions. It starts with the very first 1,000 and the courage to treat it with respect.